Welcome back to the channel, and thank you for joining me. I'm Algabot, your guide to automated trading strategies for MetaTrader 5. Today we're taking a close, educational look at an expert advisor called Pearson Correlation Trend Shift. This strategy uses a clever statistical idea, the Pearson correlation coefficient between price and time, to judge whether a genuine, orderly trend is forming out of market noise. Over the next few minutes, you'll learn how the indicator works, how the entry and exit logic is built, and how it manages risk with an ATR-based stop and target. Let's dive in. So what exactly does the Pearson Correlation Trend Shift expert advisor do? At its heart sits a single, elegant measurement borrowed from statistics, the Pearson correlation coefficient. Instead of correlating two different assets, this strategy correlates price against time itself. It looks at the most recent closing prices, lines them up against a steadily rising time ramp, and asks a simple question: how closely does price follow a straight line? The answer, which we'll call R, always lands between -1 and +1. When our approach is +1, price is climbing along a near-perfect straight line, a clean, orderly uptrend. When our approach is -1, price is falling in an equally orderly fashion, a clean downtrend. And when our hovers near zero, price is wandering with no linear direction at all, which usually means chop, a range, or a cycle. What makes this approach interesting is that it's fundamentally different from a regression slope. A slope measures how fast price is moving, and it grows with volatility. Correlation, by contrast, measures how consistent or linear the move is, regardless of magnitude. A slow but orderly drift and a fast but orderly run both read near the extremes, while a violent but choppy market reads near zero. Because correlation divides covariance by the product of two standard deviations, it is completely scale-free. That means it behaves the same way across different symbols and different time frames, without any per-market tuning. This EA is designed as an educational example of a trend emergence system. It trades both long and short, and it's most naturally suited to traders who are curious about statistical, rules-based approaches to spotting when a real trend is establishing itself. As always, remember that trading carries risk, and losses are a normal part of the process. Let's walk through the exact logic, step by step. On every completed bar, the strategy recalculates the correlation between the last 20 closing prices and a rising time ramp. That window length is set by the CorrPeriod parameter, which defaults to 20 bars. It also calculates the average true range over 14 bars, which it will use to size the protective stop and target. Now for the entries. The EA is looking for a fresh crossing, not just a high reading. A long signal appears when the correlation was previously below the entry threshold of 0.55, and on this bar it climbs up to meet or exceed it. That fresh up cross tells the strategy that an orderly uptrend is establishing itself out of the noise. A short signal is the mirror image. The correlation was previously above -0.55, and on this bar it falls to meet or drop below it, signaling an orderly downtrend taking shape. Using a fresh cross rather than a static level matters. It produces discrete, one-time entries instead of re-signaling on every single tick, and it naturally filters out the low correlation chop where the reading just drifts around zero. The result is fewer, cleaner signals. Position management has two layers. First, if the EA is holding a long and the opposite short signal appears, it closes the long and reverses into a short, and the same the other way around. Second, there's a consistency decay exit. While long, if the correlation falls back below the exit threshold of 0.2, the strategy concludes that the linear structure justifying the trade has broken down, and it steps aside. The short side works symmetrically. Notice that the exit band is deliberately kept inside the entry band, so a trade can never open and then immediately fail its own decay test. Finally, every position carries protection from the moment it opens. The stop loss is placed at 2 times the ATR away from entry, and the take profit is set at 3 times the ATR. That builds in a reward-to-risk structure of 3 to 2 on each trade, letting the market's own volatility define how wide those levels sit. If neither a fresh signal nor the decay rule closes the trade first, the ATR stop and target manage it to completion. Let's look at the actual MQL5 code the expert advisor runs, styled here just as you'd see it inside MetaEditor. At the top are the input parameters. CorrPeriod, defaulting to 20, sets the correlation window. Entry threshold, at 0.55, is the band a fresh cross must clear to open a trade, and exit threshold, at 0.2, is the consistency decay band that closes it. ATR period is 14, while SlAtrMult and TpAtrMult, at 2 and 3, scale the stop and target against the ATR. Lot sets a fixed position size, and magic tags the EA's own orders. Below the inputs are the two signal conditions. The long signal is true when the previous correlation reading was below the entry threshold and the current reading has climbed to meet or exceed it. That's the fresh up cross. The short signal is the exact mirror. The previous reading was above the negative threshold, and the current one has dropped to meet or fall below it. Now look at the long block. When the long signal is present, the code reads the ask price as the entry, then places the stop loss below entry at SlAtrMult times ATR, and the take profit above entry at TpAtrMult times ATR. It then calls trade.buy with those levels. The short block is symmetrical. It reads the bid price, places the stop above entry and the target below, again scaled by ATR, and calls trade.sell. Both orders are labeled so they're easy to identify. That's the entire core of the strategy. A correlation cross deciding direction, and ATR deciding where protection sits. Let's bring the whole strategy to life on a chart. Up top you can see the price candles, and in the panel beneath them we're plotting the Pearson correlation between price and time. Notice the panel has 4 dashed lines. The green line at plus 0.55 is the long entry band. The red line at minus 0.55 is the short entry band. And the two gray lines at plus and minus 0.2 mark the consistency decay exits. Look at the first few candles on the left. Price is drifting sideways, ticking up and down without any real commitment. Down in the panel, the correlation is hovering close to zero, even dipping slightly negative. That's exactly the reading we'd expect from CHOP. There's no linear direction, so the strategy stays patient and does nothing. This is the filter doing its job, keeping us out of a directionless market. Now watch the third and fourth candles. Price begins to step higher in an orderly way, each close building on the last. The correlation climbs quickly, from near zero, up through 0.35, and then, on our buy candle, it crosses cleanly up through the green 0.55 band. That fresh up cross is the long signal. You can see the buy entry marker appear right there. At that moment, the strategy reads the ask price, places its protective stop 2 ATR below the entry, and sets its take profit 3 ATR above. The correlation is confirming that a clean uptrend is establishing itself out of the earlier noise. Follow the next few candles. Price keeps marching higher, and the correlation rises with it, up towards 0.8 and beyond, deep into the clean uptrend zone. This is the orderly, linear kind of move the whole strategy is built to catch. The trade is simply held because there's no opposite signal and no decay. Then, at the take profit marker, price reaches that target sitting 3 ATR above the entry, and the long position closes for a completed move. Notice the correlation was still strong at that point. It was the ATR target that closed the trade, not a breakdown in structure. Now the character of the market changes. After the peak, price rolls over and starts to slip. In the panel, the correlation drops sharply, falling back through the exit bands, through zero, and turning firmly negative. The earlier uptrend structure has completely dissolved. Watch the candle where the correlation crosses down through the red minus 0.55 band. That fresh down cross is the short signal, and you can see the sell entry marker appear. Here the strategy reads the bid price, places its stop 2 ATR above the entry, and sets its take profit 3 ATR below. From there, price falls in a clean, orderly downtrend. Each candle prints a fresh low, and the correlation slides toward minus 0.8 and deeper, confirming how linear the decline is. Just as before, the position is held while the structure stays intact. Finally, at the last marker, price reaches the take profit target 3 ATR below the short entry, and the trade closes. Step back and look at the whole sequence. The strategy did nothing during the choppy open, took a long only when the correlation confirmed an orderly rise, and took a short only when it confirmed an orderly decline. In both cases, the same reward-to-risk structure of 3 to 2 was in place from the very first moment. defined entirely by the market's own volatility through the ATR. That's the core idea. Let a statistical measure of trend consistency decide direction, and let volatility decide where protection sits. Of course, not every signal plays out this cleanly in live markets, and losing trades are a normal part of any approach. And that brings us to the end of our look at the Pearson Correlation Trend Shift Expert Advisor. Today we explored how the Pearson correlation between price and time can measure whether a trend is genuinely orderly, how the strategy enters on fresh crosses through its thresholds, how it manages positions with reversal and decay exits, and how it protects every trade with ATR-based stops and targets. Remember, everything in this video is for educational purposes only. It is not financial advice, not a recommendation, and not a solicitation to trade. If you found this breakdown helpful, please give it a like, leave a comment with the strategy you'd like me to cover next, and subscribe for more MetaTrader 5 strategy analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.